Welcome to traders. Yesterday's Fed decision was expected by the markets. However, despite almost 100% of the market predicting a pause in monetary policy, the Fed still managed to surprise investors. As a result, assets saw high volatility and a dramatic change in the outlook. The Fed's decision to keep interest rates on a hold for the third meeting in a row dragged the US dollar down. As a rule, the Fed chief was usually very cautious in his comments. This time, the majority was ready for Jerome Powell to speak again in his usual manner. However, instead of the usual warnings, he said that inflation has eased from its highs and this has come without a significant increase in unemployment. In other words, the speech was about the so-called soft landing, an ideal scenario for the US economy. Moreover, the US regulator intends to move to policy easing next year, lowering the interest rate by 0.75%. Yesterday's statement by Jerome Powell became a crushing factor for the US dollar and for the assets whose yield it provides. The US dollar index spiked to 103 and went into a flat of 102.30 and 102.80. Consolidation of the greenback takes place against the background of strengthening all its major counterparts in a basket of currencies. Early Thursday, the US dollar index slumped to its permanent low. The next technical support level is at the 101.80 mark. The bearish momentum may drag the price of the world's main currency even lower, and today the US dollar has hit multi-month lows against the Australian and New Zealand counterparts, including the Japanese yen. As a result, the Japanese currency strengthened by 1.3%, touching a 4-month high of 141.70. It was trading near the lower boundary of the 140.90 and 142.90 range in the early Thursday trading. Technical support level are at 140.30 and 138.80. The 138.80 level is also noteworthy at a historical significant level of a growth of a bullish demand. In addition to the US dollar's weakness, the dollar-yen pair continues to be pressured by expectations that the Bank of Japan may end its negative interest rate policy. However, against the backdrop of the US Fed's future dovish turn, Japan's monetary policy will look more hawkish. However, the slush fund scandal in the country's routine Liberal Democratic Party, which has escalated over the past 24 hours, is likely to accelerate changes in Japan. In 2012, the former leader of the party, Shinzo Abe, launched a monetary stimulus for the Japanese economy. His policy has been dubbed Abenomics and has underpinned the yen's weakness for many years. Markets also expect the Japanese currency to strengthen amid the recent increase in political infighting. Federal Reserve's dovish signals not only pushed risk assets higher but also improved the outlook for commodity demand. With this double support, the Australian dollar was able to rise above 0.67 early Thursday. The Aussie moved into a consolidation range of 0.6650 and 0.6730 after yesterday's sharp rally, but maintained its bullish momentum. The currency also found support in the release of domestic data, and the data showed a decline in consumer inflation and a significant improvement in the Australian labour market. Therefore, the pair may move to the August high of 0.6723, followed by the important psychological level of 0.65. 67 and 50. On the other hand, the key support level of 0.6650 remained critical for the Aussie dollar pair. The New Zealand dollar also strengthened against its US counterpart, rising above 0.6240. However, the optimistic outlook for the Kiwi was dampened by domestic economic data. New Zealand's GDP reportedly shrank by 0.6% and 0.3% on a year-over-year and a month-over-month basis respectively. This means that the country's economy has entered a recessionary phase, with the fall in production being the main pressure factor. The signs of a recession pushed the Kiwi dollar pair back to the 0.6170 and 0.6250 range, maintaining bullish momentum. The Indian currency also maintains its bullish momentum early Thursday, and the rupee has been in a vulnerable position over the past week after the country's central bank left its key interest rate unchanged for the fifth consecutive meeting. Since early December, its exchange rate has been hovering near a record low of 83.40. Despite sharp fluctuations in the US dollar exchange rate, its volatility has been offset by increased capital outflows from India. And today, the rupee attempted to recover to 83 and 30 amid weakness in the US dollar. Against the euro, the rupee was trading near 90.60 today. That's all for now. Stay tuned for more updates with the InstaForex TV. We appreciate your feedback. Please leave your questions and comments below and see you online soon.